the main thing that we should take out of this class is understanding support resistance, understanding liquidity, understanding market structure. Those are the three most important things that,
Liquidity is a bit, I don't know, but
yeah,
all things are possible anyway.
good. So today, let's take this time to refresh and to ask questions. Anything that you don't really get from all the way we've been trying to combine this concept to frame a trade setup. Just if you took some notes and all that, you can let's ask them and let's try to go over them the way that we can for this session. Um, yeah, so that's what we want to do. Great. So let me finish what I was saying about this before. Then I can give all of you chance again to ask the questions that you want to ask. So now that price stop us out at 78.6%, which is the red line here, and it pushed to the upside. The moment we saw an engulfing candlestick that came back into the our sell or premium zone, we can now take our new entry, and our stop loss is going to be a little bit smaller this time. Our stop loss is going to be the high that it gave us or the high at the left side. Okay. And because we are inside the premium again, we can take the sell. Our goal is now we have a change of character or an indication that price wants to go bearish. Okay. So on this chart right now, the area where we will do a bigger sell, where is that area? Iche, where can we do a bigger sell? Where are we going to be very, very, very sure that we want to do a very big sell where you can increase your stop loss? Sorry, your loss size. Where? I'm asking Uche, or anyone can answer. Mary, can you answer? Precious? Okay,
The
where
area
can we
where
do?
we can a
Where?
bigger sell.
Where?
I think when the after this break of structure here, I
Good,
don't know,
good.
the we
So,
go the sell, we continue to sell.
good. So, already I told you that this area is this low here area. Yeah, this low here. It is the last low in the whole structural price action to the upside. Okay. That if it is to be taken out, we will have a change of character. And we got that change of character. But according to support and resistance, we have an indication that we will go bearish below this area. Are you guys with me on this?
Yes.
Good. Now, price quickly moved, engulfed, and moved up above. So we got that push to the upside. Okay. So we are not ready to sell yet. Only when price is below that area that we can now go in big. Now, we now frame the setup with the idea of structure and also liquidity grab. So we're looking at price in premium, and then price got into the premium, sold a little bit. Okay, and our premium, because this is the high that broke the structure for us, giving us that indication, we measure with our FIB and we got our premium zone, which is above 50%. But already there was this high here that we had. So the bigger um, measurement, if we are to look at the bigger measurement, we have to measure from this area, this high rather. And if you look at how where price went to, it went exactly to 78.6%. Okay, can you all see that? It went into it, dropped down. Below it is where we got that switch. Okay, so we have two area of interest now. First, we have this area, this whole area up to the 50% zone that I can color as, let's say, red. No, let's say I can color this as, give it a red color. Yes, it's too deep orange. Yeah, it's too deep. Yeah, but it's fine. So we have two areas, the bigger area and the 78.6% area was around this zone. So we have two red lines. So let's see. If you look at this area at the left side, anytime price hit this area, below this red line, above it is like rejections, but below it is where price really sold. This means that if price is to break above this area or have a very big candle, bullish candle above or from this area up, price is going to be going bullish. So let's see. It makes that indication wanted to break above, but we still got a rejection, and we saw a bearish engulfing candle that brought price below that red area. So see, below this red area, price sold. Below this red area, price, big bearish candle, price sold. Below the red line, price sold. Are you guys observing that? This is what you have to look for on the market. This is pure support resistance. Okay, support resistance. So you can have multiple areas of support resistance on your chart. This is a 4-hour chart. Good. So we are looking at the premium zone, and our main area of interest is on 78.6%. But we are mapping that with support and resistance, so that above that resistance, we know that price is going to buy. Below that support, we know that price is going to sell. So the same line represents support, the same line represents resistance. Okay. Then we have a second line too that is below here. We have a second red line. So a more sell entry is here. Okay. A more sell entry is here. But at this point, even on the first red line, at this point here, this candle might not have closed. The engulfing candle, bearish candle might not have closed on the what do you call it? On the bearish, when the bearish candle was engulfing, it might not have closed. So you have to wait for it to close. And it closed inside or into this second area of interest that we measured. Then it moved up to retest, but it rejected again on the red line. This was an early area where you can enter your trade. This 4-hour, but you'll be monitoring this because you've mapped out all this already. When price is falling exactly within that, you'll be watching the chart, or you monitor the chart from time to time to see what it's doing. Then you zoom into the 15 minutes or 30 minutes to see what is happening. And then you can have a good entry. Okay, so let's say we got this entry. The moment price got to where we will increase our loss size, because all this area is still fresh. Price is now accumulating and trying to build up for the reversal. Okay, so we have to be a little bit more preservative in the lot size that we use or in the trade. But now we are in profit and we get below here. The moment price hit this area, it made an attempt to go up a little bit. But the moment we saw price breaking below this area where the change of character is, where we had the previous indication, from here, if you increase your lot size to one standard lot, look at how big the candle was. Uche, are you seeing that?
Yes, sir.
Yes. So you see, I told you, below that area, okay? Because why? Because we got the indication of previously, okay? But price pushed big to the downside. 1, 2 candles, 4-hour candles. This is a lot of money. Okay, for you to get even one big 4-hour candle or two to close on in your favor, that's a lot. Okay, and all is just when price came below. So, but when that happened, what did we observe? It broke another low. This is the second indication that price wants to go more bearish. At this point, there's nothing to doubt about this setup. We have double confirmation, second break of structure. Okay, so now from this high here, we've already mapped out all our entry procedures. This red area is giving problem. Yes. So one, we want to sell below the first red line. We want to sell below the second red line. Those are our zones or our entries. Now that we got a second break of structure, anytime there is a break of structure, what happens? We expect what? Corrective. Impulsive move that shifts structure. What do we expect? Corrective. No matter how low this price action will go, it will always pull back. So you don't want to, if you want to sell, you take your entry right where the break of structure is happening, the breakout is happening. Okay, if already you got the indication. Okay, because now we have one indication already. So you can feel confident to enter your trade right where it's breaking the structure and drive it. But this is like a scalp because after every break of structure or every break of a previous high or a previous low, there is always at some point going to be a corrective or a pullback, a corrective or a pullback. So now you just take profit as you are satisfied and then you close that big loss size. But let's see what happened again. Price corrected back into the zone. And the moment, so once somebody will be expecting to sell again here. Those who are more preservative, they want to see the second break of structure and they want to sell below here. Did they succeed? Hello?
Yeah, no.
No, here at this point. Okay, price hit here. The first time when it I think there is some wicks here. It hit here and rejected, but it came back there again. Did it sell? No, because you have to observe. You should see an engulfing bearish candle here before you sell. Anytime you see this area, the candle was very, very big. The bears were in control, sellers were in control here, below here. But at this time, price came, rejected, sold, and then it came back again. This candle was not a bearish candle on the 4-hour. But the ideal thing was we should get a new sell here. So the market will not always give you a straight milk for you to take. Okay, so this is the sell entry. Where will your stop loss be? Just a little above that zone. Okay, a little, because sometimes price could go up and then engulf again back into it. But what did we learn from the previous thing. Anytime price is above that zone, it does what? It buys. So now that price when goes above that zone. So with this understanding, anything price is doing, you will be able to at least have a glimpse of what it's doing, and then you can now make good decisions. Anytime price is above this area, what happens? It buys. Now it's able to break through that and it's above. So what do? You close your trade or you don't hold the trade. If you wanted to see price break down again and then on the rate test, you want to buy a sell. Okay. But when it moved up, it came directly into our red line, 76.8%, this area. Hit it and price was below. So you have multiple sell entries, one at the top here, one at the below here. Price hit that area and it was below, rejected, it was below. That's enough. This is a new sell opportunity because we've mapped this already. We've mapped it already. Okay. Now, price gave us that sell. The moment it broke and came back below the support, what do? Sell. So this is where if you were waiting to sell here and it stopped you out again, this is where you get your re-entry. You don't stop and go and say that, yeah, your money is finished or the market has taken your money. No, we have to be very strong in heart. Okay, exactly below because we want to sell below. The moment price closed below that again, look what it did. It did a small rate test inside that zone, and there was an engulfing candle that was pushing price to the downside. On that engulfing candle, that's your entry. Okay, so one, you have a better sell entry at the top there. Second, we have another sell entry below here where we say below that zone we are selling. At this point, if all your analysis is right and you have confidence, look at it. You drive to the next. So there's a point that price will range or accumulate that when it break out, it's going to take a long time before price reverses to that zone again. Now this is a real breakout. Okay. So you drive price into the next structural low. Okay. So we were dealing with the internal low that gave us that high. Now we have the last external low before the higher high. Now price traded into that area. If price is to break this external low, we will have more sells. So what happened? The same analogy, idea that we used here,
It happened.
we are going to apply the same thing here too. Okay, because already look at the left side. Price hit here, it goes up. Price hit, it goes up. We can extend this rectangle. Okay, we can extend this rectangle. Price hit here, it goes up. Hit here, goes up. Hit here, what should it do? It will go up. Price did not close below. So at this point, we don't have the confidence that externally we are going to go bearish yet. So this framing of the sell setup from the top here, the final TP is just here. So until price breaks below here, okay, we are not going to go bearish because from here, price can come back up and then keep going up because we were bullish before. Are we guys following? Are we
Yes, sir.
guys following?
Yes.
Perfect.
Yeah.
Good. So the same analogy we use up there, we have to use the same thing here. What do we look for? We look for indication. Anytime price closes below this support zone, when price is above the support, it will buy. Sorry, the resistance, it will buy. When it's above, when it's below, it will sell. That's the analogy. Okay. So that's what we do. We map it down again. Now, price retraces and goes up, consolidate. So around this area, or you don't have any point selling because you've already made your profit from the top to the down. All this thing that happened here, you are out of trade. If for the week you took this and you were successful, all this area, you are not following to trade again because you might keep selling and it will be pushing up. You might even be tempted that this you might be tempted that this is a change of character. You see, this last high that gave this low was taken out. So this is a change of character. You wait for price at discount and then you buy. Did you buy? Yes. When you wait for price comes above that zone, which is above resistance, you buy. Above resistance is the same or has confluence with your discount. This is the discount area. And it's above resistance. Price comes there, buy, comes there, buy, comes there, buy. But let's notice, it does not give us a new break of structure or a second break of structure. This is the indication that if you keep holding buys, you will fail. Okay. But even if, let's say, you keep holding buys here, the moment you see price break below, that's it. The moment price broke below or closes below this area, this is the indication that external low, okay, external low of this bullish move is taken out. And we have a proper confirmation that price is going to be selling. Okay, so we've already also said anytime price is below this area, we do what? We want to sell. So below here, boom, you catch. So let's say you were buying, and price stops you out. With this knowledge, you jump on a sell. That's all. You will recover your money. It's simple. So you have knowledge of both sides. It's not as if you are gambling. No, this is not gambling. Because you know, and you've already mapped it out, that if price is to close below this area, you are selling. Now let's see. Price sold, came back into that same area, retested. The moment it's closed, is below that area. Another what? Sell from here. This is your sell entry always. Stop loss is about a little above the zone because price could go there and still drop down. Okay, so the moment price sold, it gave you this nice sell. This is a 4-hour chart, so this is a lot of money. Price comes back into that same area, and then we see rejections. If you are still holding this trade, you are in profit. Okay, it comes back, drops, and breaks structure again. Are you guys seeing it? We break structure again the second time until price rises up and takes out this area and closes above this zone. We are still bearish. Step 100. This is the entry for buy. And this is the entry for sell. Until price comes up and closes above this area, externally, we are bearish. This is a second break of structure. Okay. So you can still map up a new support resistance within this zone below here. You can still map up a new support resistance here around this area. Okay, and you can extend it back and see how many touches we have. Okay, so I can see that Good. As many touches as possible. That is going to help you. So anytime price drop into this area, it goes up. Above it, price buys. Below it, we see a little sell here. Above this area, price buys. Above, buy. But below that, sell. Below here, sell. Above it, buy. Above it, buy. Below it, we saw a small sell. So right now, if anything happens and price comes above this area, it's a buy. Are you guys following?
We can actually be buying and selling.
You said what?
I said we can actually be buying and selling
Yes, that's the reason for the whole market. It's market trading, buying and selling. So, if price is to close above,
because sometimes they say they don't trade against the
yes, that's what I'm saying.
the
So you have to be disciplined. I am only trying to let us understand that we are combining structure, we are combining support resistance and liquidity, the concepts. So if we are to frame this cell setup really, really, really very well, okay. Now we have seen a high here and we've seen a break, a previous break of structure here, and we have seen a second break of structure. At the second break of structure, what do we expect? Is it not a pullback? Is it not a pullback?
yes.
Good. And now we are learning that if price is above this small zone here, it goes up. So what other thing do you need again to scalp? If price goes above this small support resistance zone in between this area, you do what? You scalp. But where is your target? For scalping, mostly you might not have strong target. As long as the money you are making is good, you close for scalping. But we know that the general thing we are expecting here is a bearish market. So until price take out this high here, we are still bearish. Okay, but you can have a scalp around this area. And if price is to trade up and take out this area, what is the meaning of that?
They're
Uh,
going for
Can
it's going
anybody
to be
tell me if
going
price is to take this area, this internal high, what is the meaning?
internal high. That means it's sweeping
Good,
liquidity.
good. So now we have a break of structure to the downside here. Let's say here. Where is our premium zone? Our premium zone is anything above 50%.
Yeah.
We can even use this area as our, because this was a valid low. So we can, that's where the break of structure happened. So we can use this area as our premium zone. Good. So whether price is going to go up there, I don't know, but because it gave us this area. So this is our premium zone. Okay, because this was this low, if you all can see this low, this area, this is a previous low that gave a high. So once price takes that area out, we have a break of structure to the downside. So our zone is going to be framed around price coming to this area, but a more refined zone will just be, if you want to be more conservative, where price broke the structure, you can just measure up to that place and get your above 50% premium zone. But let's just stick to this for now. Okay, so in case price is below this support here, so it's likely to sell. But in case something happens and price goes up above this area and it's above here, is it going to buy or not? It's likely to buy until it drops down and closes below this area. But if it's buying right now, if you start pushing down here, this is not a time for you to be looking for sales. No, wait for it to do what it wants to do because price draws to liquidity. Double tops, we have double top here. Price will want to sweep this area back into the premium zone. And the moment it takes out this high, which is double top liquidity here, we're going to be likely to get a sweep or a move to the downside, a bigger move, if it doesn't sell from where it is right now. The issue is that if price goes up and closes above here, we are done. We are done until it pushes down back into the zone. But if it goes and closes above here, it is giving us an indication that price will want to go bullish this time. Okay. And that indication, price will still drop back into the zone. Okay. Well, after the indication, we'll have corrective. Price will correct. It will drop back. So when it drops back into it, then your sell setup will still be valid. Okay. But if it closes above and it's still above, then you have no point of selling. It means this setup is not valid yet. It's not valid again. Okay, so we're just trying to map out both sides. Buy, sell, buy, sell, buy, sell, buy, sell, using the concept. Okay, if you guys understand what we've been combining and explaining, any questions? Uche, do you have any question? So right now we are bearish on it's bearish on step 100 is bearish, but because of this break of structure here, there is a likelihood price might want to push up back into the premium zone. Price might want to push back up into the premium zone, likely sweep liquidity. Once it's below this support zone, it is a sell. So this support plus this premium zone plus taking out this internal high liquidity, all is a confluence that if price is to be around here, then we will be selling. And this time we should target taking out all these lows. And the moment it closes below this small support here too, because of this indication here, this is a more sell. This is where we increase the lot size. So we have things mapped up right now. Price can go up into this zone, but below here, we sell. When it's below this area of support here, we can increase our lot size for a scalp into this area. Okay, but the ultimate goal is we are likely to see price drop more into this zone because we are bearish. Until we close above this area, we are still bearish. Any questions?
No, thank you.
Okay. So we just back tested using, that's what we've been learning basically. We've been learning support, resistance, liquidity, and market structure, putting everything together. So let's see. So this is the current framing of the setup. If this high is taken, we are done. But as long as this high is not taken, we are still going to go bearish. Let's see what happens. Iche, do you have any question?
No, sir.
Okay. Yeah, so God willing, tomorrow we can look at Forex, maybe gold or Euro USD or any of the Forex space. So let's see the 25 index that we started analyzing with, where it is right now. Okay, so take out these lines. Yeah, so below this red line, we are getting sales. And below this second, let me make these two red. Below this red line too is sales. Anything above here is buys. Anything above here is buys. Okay, but we have, okay, this is 15 minutes. Let me go to 30 minutes to frame this setup. Maybe we can monitor this and take a setup from this today. How many minutes do we have for a new daily candle to open? We have about 1 hour, 30 minutes. What time is it in the UK right now?
11:20.
Okay, so at 12 o'clock or 1,
Yeah.
I think 12 or 1, something like that, there should be a new daily candle. Yeah. So we have like 1 hour and something for a new daily candle to open. So let's see how this current daily candle will close. And then, but I think from what I'm seeing right now, this is a double top. So let's see, we have gotten a break of structure to the downside. And now when we got here, price pulled back up 38%, and we got a second break of structure to this side, and we came to equilibrium. So if we are using just this range from here, we could see that we have all this area for price to sweep this internal liquidity and price to pull back into this area for us to sell again. So let's see if that will happen on the 30 minutes. Let's see if this area will be respected. But below this red line, we are likely to sell. And below this red line up here too, we are likely to still sell. Once price closes moves above this area, no, we don't need